when you look over your left shoulder and see what Bitcoin is doing and your right shoulder and Nvidia is doing, you wonder, is that how markets are supposed to react? Is that how bull markets are supposed to go? Or is it more like the price of gold, which is slowly and methodically the tortoise going higher and higher and higher every single year for the last several? Is this the move we've all been waiting for? I guess only time will tell. But I think in the face of rates that are positive against the CPI anyway, a real return, seeing gold move higher is a very bullish sign as far as I'm concerned.
Gold surged to a record high on Wednesday, driven by strong momentum attributed mainly to expectations of U.S. monetary easing. AndySchectman, CEO of Miles Franklin, notes that with gold surpassing its all-time closing high, no significant resistance levels are left, suggesting potential for further price increases. The precious metal received an additional boost as the dollar weakened following Federal Reserve Chair Jerome Powell's indication of a potential rate cut later in the year. New York-based independent metals trader Tai Wong believes that while bullish sentiment remains dominant, gold may take some time to process Powell's comments and await Friday's employment report. London's gold price benchmark reached an all-time high of $2,142.85 per troy ounce at an afternoon auction, according to the London Bullion Market Association. Andy contrasts gold's gradual and steady rise with the more volatile movements of assets like Bitcoin and Nvidia stocks. Gold continued its rally for the fifth consecutive day, hitting an all-time high of $2,152.24 during the North American session, coinciding with Jerome Powell's congressional testimony at Capitol Hill. The strong central bank buying in emerging markets continues to support gold prices. Looking ahead, the near-term demand for gold will be influenced by Jerome Powell's testimony before Congress on Wednesday and various economic data releases later in the week. Despite rising real interest rates, Andy interprets gold's upward trajectory as a bullish sign, especially in light of Powell's remarks signaling potential future rate cuts. Join us as we explore AndySchectman's insights. Stay updated by subscribing to our channel and activating notifications. Thank you.
What you're seeing now is that, typically we've seen gold and bond prices move in symmetry as bond prices were rising and interest rates were falling. Price of gold was rising, and that's the Gibson's paradox, the inverse relationship between real interest rates and gold. But we're seeing it now diverging, and this is a big deal because gold used to be positively correlated with bonds, and now we're seeing bonds falling and interest rates rising again slowly, but not the pivot that everyone was expecting. And yet gold is doing well in the face of real positive interest rates, at least if you believe the CPI. Bottom line is this is a big development for the price of gold. And now that it's busted through its all-time closing high, I mean, in terms of resistance, there is none. The sky's the limit. Now, are we going to get to those numbers like when Bank of America was saying 3,000, or is this the move up? The one that we've all been waiting for. And when you're beaten down so many times, you end up getting used to it, and you're waiting for the shoe to drop. When you look over your left shoulder and see what Bitcoin is doing and your right shoulder and Nvidia is doing, you wonder, is that how markets are supposed to react? Is that how bull markets are supposed to go? Or is it more like the price of gold, which is slowly and methodically the tortoise going higher and higher and higher every single year for the last several? Is this the move we've all been waiting for? I guess only time will tell. But I think in the face of rates that are positive against the CPI anyway, a real return, seeing gold move higher is a very bullish sign as far as I'm concerned. But all it really takes is one big thing where, what if gold spiked and silver spiked by 20% today, like we see in Nvidia and Bitcoin? Well, bang, it goes straight to the moon, $2,500 or whatever it is. In the span of 24 hours, the entire industry would be sold out. And I want people to understand that for 6 months now, or literally since Christmas for sure, anyway, 3-4 months, you and I have been talking a lot about how premiums have come way down and it's been very slow, and I didn't quite understand it, but you can slowly see that that's changing by the backdated stuff all start to disappear. And what has been very flush for a very long time, at least 3-4 months could very quickly change, and we're beginning to see that happen, at least the backside of it changing, where we're not as flush with inventory as we have been for several months now. So yeah, it just a few cents, 10, 20 cents. We're seeing premiums on silver go up. We're seeing premiums on gold just rise a little bit. I think that's indicative of what we've seen so far, which is spiked up demand. And one interesting thing is that I haven't noticed selling. And you would think when you get to all-time highs, you got a whole bunch of people who bought gold, even in 2011 at almost 2,000 an ounce, and recently, as we've hit all-time highs, we're not seeing that influx of selling that some pundits would say would happen when you get people have been hanging on for a long time and just want to let go. We haven't seen that. So I don't know. I think that if things continue the way they've been over the last few days, where gold's up over $100 in the last 2.5 trading days, you'll see things like, I think, really start to change in terms of premium.
The silver price has been closely tracking gold recently, with silver approaching $25. Despite a retreat on Tuesday, soft ADP employment and U.S. JOLTS job opening figures today pushed the USD lower and silver higher, with Jerome Powell's testimony also contributing to the momentum, leaving markets uncertain. On Wednesday, silver continued to edge higher, following a potentially bearish closing price reversal top from the previous session. While the precious metal maintains an upward trend, its strength lags behind gold, partly due to limited central bank buying. Andy believes that current market conditions offer an unparalleled opportunity for investors to capitalize on silver's potential gains. He suggests that now may be one of the best times in their career to invest in silver, remaining optimistic about its prospects amidst a global trend towards accumulating tangible assets and commodities. Let's get back to the interview.
In my life, I've never seen anything like silver, because it has so many utilities. The folks in Canada trying to push it towards a strategic metal rather than an industrial. And I think it should be a strategic metal. It is needed in so many capacities, and even in things that the military industrial complex uses that really isn't even openly counted on the supply demand fundamentals from the Silver Institute. So from military to green to digital, the need for silver is massive. And then the monetary aspect that people have awoken to over the last 3 years, largely in thanks to people like yourself who have woken up the public to the value, this asymmetrical risk reward that, the old statement, markets can stay irrational longer than you can stay solvent. But think of it this way: we are running. I mean, there's approximately, right? I'm not sure on this, but I would say approximately. Let's say there's 100 billion or less in silver above ground, right? I mean, somewhere in that neighborhood. We're accumulating that much debt right now every 100 days, or excuse me, every 10 days. A trillion every 100 days. 100 billion every 10 days. So when you talk about how much money is out there versus how much silver is out there versus the need for it and the real potential in investment, if you take the fact that you have these stupid commercial banks that have been short massive amounts for years, rendering silver the asset on the COMEX that has the largest concentrated short position of any commodity traded on the entire exchange, you take that out of the equation, and yeah, silver should be way higher. Now, I guess the bottom line is that you can only manipulate any market over a very long period of time by pushing it in the direction that it is going. And I think the difference between the markets we see now, Chris, and the markets that we've all lived through is that for the very first time in my career, 34 years, I think there is a big push globally to accumulating assets, commodities. It used to be dollars and treasuries and stocks and real estate, but that's an environment that I think it has cycled and is moving the other direction as commodities and tangibles are moving into a bull phase at a time when, you think about it for a moment, you got mining eviscerated, exploration eviscerated, you got sentiment at the lowest levels. At the same time, you got sky high deficits and massive debt and all of the issues that we see around us that we talk about geopolitically and politically and socially and morally. The contrarian side of things would say there's never been a better time to jump head first into silver. But like I said, the market has a way of staying irrational longer than we can all stay solvent. But from a standpoint of logic and mathematics and economics, I don't know that there's a better place to be. So, yeah, have strong fingertips, hang on, because I don't think I've ever seen a better opportunity in my life, in my career, a better opportunity of asymmetrical risk reward, lowest downside, best upside. And I don't think there's even a way to shoot a hole in that, at least in my logic.
On Wednesday, Chairman Powell reiterated the Federal Reserve's stance that they are in no hurry to cut rates, acknowledging that the benchmark Fed funds interest rate, currently between 5.25% and 5.5%, is likely at its peak. While Powell indicated that the Federal Reserve anticipates cutting rates at some point this year, he refrained from speculating when the first rate cut would be implemented. Given this uncertainty surrounding the timing of the first rate cut, how might investor sentiment towards gold as a safe haven asset be affected? That's all from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.